Hey there everyone, Andy Cassidy. Welcome back to the channel. Today's video, we're going to be talking about my 5 favorite ETFs. This is not investing advice. Always consult your CPA and your financial team before you make any financial decisions. Before we talk about my 5 favorite ETFs, it's important to understand what an ETF is. So, an ETF are funds that hold a group of assets such as stock, bonds, or others. More simply put, an ETF is a culmination of stocks into one sort of basket. Now, for example, let's say you have 4 stocks. Each of them make up 25% of that basket. If one of those stocks completely fails and goes to 0%, your basket will have only fallen 25%. My favorite ETF, which is Vanguard's VOO ETF, tracks the S&P 500. The S&P 500 is a culmination of the 500 largest companies in the United States. VOO has an expense ratio of 0.03%, so very low expense ratio. If we look at the sector diversification of VOO, it's heavy in information technology, consumer discretionary, and communication services. The top holdings are stocks such as Apple, Microsoft, Amazon, Google, Facebook, Tesla, and those types of stocks. So it's not going to be very volatile, most likely, and in my opinion, seems to be good for long-term holds. The second ETF that we will be discussing is once again Vanguard. Now this ETF is VTI. Now this tracks the US total stock market. Once again, expense ratio is the same as VOO of 0.03%. Once again, a low expense ratio, keeping more money in your pocket. Now, VTI has a whopping 3,669 stocks that it tracks. The sector diversification, once again, heavy in technology and consumer discretionary, but unlike VOO, this one is also a lot more invested into financials in the healthcare and the industrial sectors. Top holdings for VTI include Apple, Microsoft, Amazon, Google, Facebook, Tesla, JP Morgan Chase, Johnson & Johnson, Berkshire Hathaway, and Visa. So once again, similarly to VOO, they hold these massive corporations, so it's likely there will not be a lot of volatility. The third ETF is QQQ. QQQ tracks the NASDAQ 100. So this one will typically be a bit more volatile than VOO and VTI. QQQ holds companies such as Apple, Microsoft, Amazon, Tesla, Nvidia, Adobe, PayPal. So the 3 largest holdings are in line with VOO and VTI typically, but once you start hitting holdings 6, 7, 8, 9 of the heavy holdings, that's where you see some of that difference compared to VTI and VOO. The fourth ETF is Cathie Wood's ARK-K. Now this ETF invests in innovative companies, and it typically holds a number of 35 to 55 holdings at once. The year-to-date performance as of 12/31/2020 is up 152%. Over the last 3 years, up 52%. In 5 years, up 45%. Now, this ARK-K ETF holds a lot of investments that those who are not actively initiating in the stock market may not have heard of. So we have Tesla, Square, Teladoc Health, Roku, Zillow, Dow, Spotify, CRISPR. These are some of the main holdings for ARK-K. And if you're looking to add a little bit more volatility or risk into your portfolio, perhaps ARK-K might be one to add for you. The fifth and final ETF is once again a Vanguard ETF. This one is VYM, and this one is for the dividend investors out there. The expense ratio on VYM is 0.06%. So once again, a low expense ratio, which we like. Now this ETF holds companies such as JP Morgan Chase, Johnson & Johnson, Procter & Gamble, Bank of America, Intel, Comcast, Exxon, Verizon, AT&T. And one similarity that all these companies has is they pay a dividend. This this ETF rather, is heavy in financials, healthcare, and consumer staples. So if you're looking to add some more diversity to your portfolio to get away from some of these technology-based ETFs or consumer discretionary-based ETFs, VYM is perhaps a good one to add. As I contemplate the information I've shared with you, the way I would break it down, and keep in mind I'm more of a real estate guy and I'm just filming on YouTube, so make sure to always do your own research before you invest your money. But the way I would break it down, since I'm younger, I'm willing to take a lot of risk, and I would probably go 30% into ARK-K, 20% into QQQ, 20% VTI, 20% VOO, and only 10% into VYM, because I'm not really looking for dividend cash flow right now. Rather, I would prefer to have more growth. Whether you invest in exchange traded funds, index funds, individual stocks, dividend focused stocks, whatever it may be, make sure you understand what you want. There's also a path of real estate, both commercial and residential. Check out the playlist we have here on the channel. That will go over a lot of the ways you can produce income with real estate, how to sell and buy real estate, and just gives you overall a deep look into real estate from a real estate agent. Make sure to check out other videos we have here on the channel. Thank you guys for watching the video. Make sure to like, comment, and subscribe, and I'll see you in the next one.